In a stunning turn of events, the curtain has fallen on the first act of President Donald Trump's high-stakes tariff and trade war with China, as the United States and Beijing announced a dramatic reduction in levies that had escalated tensions between the world's two largest economies. The agreement, finalized earlier this week, slashes 115 percentage points off the tariffs both nations had imposed at the peak of the conflict, leaving U.S. tariffs on Chinese goods at 30% and Chinese tariffs on U.S. exports at 10%. While this de-escalation marks a significant shift, a 90-day pause agreed upon by both sides leaves open the possibility that tariffs could rise again, keeping global markets on edge. The trade war, ignited by Trump's April 2 Liberation Day announcement of sweeping tariffs on dozens of countries, sent shockwaves through the global economy. The bold move, initially framed as a strategy to revitalize American manufacturing, led to market turmoil, strained international alliances, and sparked fierce debates within Trump's own administration. Now, as the dust settles, the winners and losers of this turbulent chapter are coming into focus, with far-reaching implications for global trade, political landscapes, and economic stability. At the forefront of the winners is U.S. Treasury Secretary Scott Bessent, who has emerged as a pivotal figure in steering the administration toward a softer approach. Bessent, a former hedge fund manager, advocated for a shorter-term tariff strategy, arguing that the sky-high levies, equivalent to a trade embargo, were unsustainable. Neither side wants that. "We do want trade," Bessent declared, emphasizing the need for a balanced approach. His prediction last month of an imminent de-escalation with China proved prescient, and his ability to sway Trump without appearing disloyal has cemented his influence. Bessent's diplomatic finesse outmaneuvered trade advisor Peter Navarro, a staunch advocate for aggressive long-term tariffs, highlighting a rare internal victory in an administration often marked by competing voices. The stock markets, battered by the initial tariff announcement, are also breathing a sigh of relief. The S&P 500, Dow Jones Industrial Average, and Nasdaq Composite plummeted in April as investors grappled with fears of a global recession. However, the tariff reduction has sparked a remarkable recovery. The S&P 500 is now up 0.3% for 2025, while the Nasdaq surged 1.6% on Tuesday alone. Though the Dow and Nasdaq remain slightly below their year-start levels, the deep troughs of early April are fading, signaling renewed investor confidence. This rebound underscores the market's sensitivity to trade policy shifts and the relief brought by the U.S.-China détente. Across the Atlantic, the United Kingdom has scored an unexpected victory. While many anticipated Japan or South Korea would be the first to secure a post-April 2 trade deal, Britain clinched a limited agreement covering cars, steel, and aluminum. The deal, reportedly finalized after a call between Trump and British Prime Minister Keir Starmer, caught watching his beloved Arsenal Football Club, bolsters the UK's special relationship with the US. For Starmer, the pact is a domestic lifeline, providing a boost after his Labour Party's poor showing in recent local elections. The agreement highlights the UK's ability to navigate Trump's unpredictable trade landscape, positioning it as a key player in future negotiations. Federal Reserve Chair Jerome Powell also emerges stronger, having maintained his composure amid Trump's aggressive calls for interest rate cuts. At one point, Trump hinted at firing Powell, a move that sent markets into a tailspin. Yet Powell's refusal to bend, coupled with his defense of the Fed's independence, has been vindicated by recent data. April's consumer price index rose by a modest 0.2%, lower than expected, suggesting inflation remains manageable without drastic rate adjustments. Powell's steady hand has preserved the Fed's credibility, even as Trump's threats briefly rattled investors. For President Trump himself, the outcome is a mixed bag. The tariff reduction and market recovery burnish his image as a deal-maker, potentially mitigating political fallout ahead of the 2026 midterms. However, the chaos of the past month, marked by lurching markets and global uncertainty, was largely self-inflicted. Trump's initial tariff gambit, sold as a catalyst for a manufacturing renaissance, has failed to materialize, with few believing the promised industrial boom is imminent. His retreat from the hardline stance may limit damage, but it also exposes the limits of his confrontational approach, particularly against a resilient adversary like China. China, too, finds itself in a complex position. The tariff war strained its export-driven economy, a vulnerability despite recent diversification efforts. Yet Beijing's ability to withstand Trump's pressure and secure a reduction in tariffs is a strategic win. By standing firm, China demonstrated its economic staying power, forcing Trump to seek a truce. The episode also revealed U.S. vulnerabilities, such as Trump's admission that bond market warning signs influenced his decision to pause tariffs on other nations. For Chinese leaders, this outcome reinforces their confidence in outlasting American pressure, even as they remain cautious about future escalations. Among the losers, Canada stands out as a nation still grappling with unresolved trade tensions. With the U.S. as its largest trading partner, Canada faces significant risks from ongoing tariffs on steel, aluminum, and lumber, with retaliatory measures in place. While Trump's actions inadvertently bolstered Canada's Liberal Party, which capitalized on anti-American sentiment to improve its electoral prospects, the lack of a comprehensive trade deal leaves Canada exposed. The coming months will test Ottawa's ability to navigate this precarious landscape. Peter Navarro, Trump's trade advisor, is perhaps the most prominent casualty. Once a central figure in the tariff push, Navarro's vision of high, sustained tariffs to reshape global trade has been sidelined. The market chaos triggered by his policies, coupled with Bessent's more pragmatic approach, diminished his influence. Navarro's maverick status, long at odds with mainstream economists, now appears misaligned with the administration's evolving strategy, marking a significant setback for the tariff hawk. As the 90-day pause unfolds, the world watches closely. Will the U.S. and China maintain this fragile truce, or will tariffs climb again, reigniting global tensions? For now, the de-escalation offers a moment of respite, but the stakes remain high. The trade war's first phase has reshaped alliances, tested leaders, and exposed the delicate balance of global commerce. As negotiations continue, the path forward promises more twists in this high-stakes economic drama.